Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. All right, everybody, let's take a look and see what happened on Friday, which would be December 17th. And I'll talk a little bit about what I think is going to happen in next week. Just as I'm doing this video right here today is Saturday. So let's take a look and see what's going on here. What happened to the stock market on Friday? Well, that's Friday's candlestick right there. Big red candlestick. 2 days in a row. Came down, actually got below the 50. So the low of this candlestick was 4,590. And at that time, the 50 moving average is 4,598. So almost 99. So a good 8 or 9 points below the 50 day. Right now, this looks weak. Continue to look weak. MACD's trying to roll over. I talked about this on Thursday when I saw this candlestick right here. These indicators are already showing weakness. The MACD is flattened out here. Looks like it's trying to separate. Hasn't done it yet. It's a rising 50. So again, on the average, prices are going up. I think there's a good chance you're gonna get a candlestick on Monday, whatever, Tuesday, who knows, whatever. But it's gonna straddle the line, maybe something like that. Okay. Hey, maybe Monday's a green day, then Tuesday comes down and straddles the line. I don't know. We'll see which way this is going to go. But I think based on what I'm seeing here, there's a good chance we're going to get significantly below the 50 with a partial candlestick, or maybe even some full candlesticks are going to come into here. You know, as we go into the last couple weeks of the year. Okay. So just based on what I'm seeing here, I see weakness and enough to potentially warrant breaking below the 50-day. So I think there's some opportunities there, possibly on the short side, especially if Monday is a red day. Then the chances are super high, unless it's a really small candlestick, which could happen. But these have all been. Look at all these candlesticks. Look at them all. They're all huge. I mean, even this candlestick right here was a range of 40. All these candlesticks, especially from this one going this way, all of them have been big. So I don't, it's possible you get a small candlestick there, sitting on that 50 like that. I guess that's possible, but I'm inclined to think that's not going to happen. I think we're going to get below the 50, if not Monday, Tuesday, whatever. Somewhere there we're going to get below the 50 and going into early next week, I think is what's going to happen. Let's take a look at the cycle low. December 26th, day after Christmas. Okay, that's this low here. So I think see even that, because Monday's going to be what? Monday's going to be the 20th, okay? And this week, with Christmas coming up and Christmas Eve, and then of course we have New Year's Day and the trading schedules, holiday schedules, they like to say, is impacted. But I think it gives credence to the fact that prices will decline even more. Indicators say it, okay? Cycle low says the decline's probably going to happen. So I think there's a 60-40 chance, maybe even 70-30 chance, if you really want to pin me down the probabilities. Yeah, I think there's a greater chance than not to get below the 50, but especially since the cycle low is going to be right around Christmas Day, day after Christmas. Okay, let's look at the monthly here. A decent range, 251, but pretty small candlestick as far as the body goes. And if it's like that come the end of December, which this could maybe, see, where was the open here? See, 87, and we're currently at 46.19. So could we get a doji? 45.87. Let me go back to the daily for a second. That would have to be a pretty decent drop. It's possible. It'd have to get down into this area. Okay, well, you know what? Actually, it's not as far away as I thought it was. It'd be like right down in here. So yeah, I think it's possible. It's possible that the monthly candlestick could end up actually red by a little bit. Yeah, I think that candlestick right there could end up red, guys, going into going into January. That candlestick right there, I think, could get red before the month is out. We'll see what happens there, but I think that's a good chance that'll happen. Let's look at the weekly. By the way, these cycles that you're seeing on the monthly and the weekly, you can ignore them. They're just daily cycles still sitting on the chart. Pretty decent red candlestick for the week. I see more weakness here, guys. So I think there's another week or two, maybe even more. Look at this. I mean, if I look at where are we at right now? Let's just look. I'm gonna hover my mouse over the candlestick, but I'm looking at that bottom SMI, just looking at the numbers there. 20.47. Let's just say 20 and 28. For those who want to know what I'm looking at this down here. These numbers right here, okay? So that hover over the mouse, we'll see them. It's just going to call it 20 and 28, okay? So now we're going to go back in history, and we're looking for a similar number back over here in this area, okay? Because we can see and make a comparison, right? 20 and 28. Okay, so this candlestick right here is kind of the closest one we're going to get. What is this one? Yeah, so it's kind of like that candlestick right there, okay? Far as the SMI goes. And how many more days, how many more weeks was it till bottom? 2 more weeks. So if I'm just going off a really overly simplistic comparison, this SMI, it's got 2 weeks in it. And that takes us right to the end of the month. Okay? So yeah, I think price decline, there's another 2 weeks of price decline, right on time. Right to the end of the month. Okay? Which again gives credence and credibility to that daily cycle low. It's all pointing towards the end of December as the cycle low and prices declining. All right, I'm back. I had to go get some coffee. Let's do this. Okay, hourly chart. Let's see what I got going on here. Hourly chart. Well, let's see the Friday session, guys. And this is Saturday, as I already mentioned earlier in the video. But this is the Friday chart right there, hourly. Okay, so don't you just love futures? 23 days out of 23 hours out of 24. I mean, what's there not to love about trading futures? Okay. By the way, hopefully, if I forget everybody of the premium members, I've been trading ARLP, that stock, for the last 4 days for a swing trade. It was a really good swing trade. It may have a little price decline, okay, but coming up, I should say, might have a little price decline. But I think, guys, and I mentioned this in a video earlier in the week, I think there's a good chance in February that ARLP is going to increase their dividends. I don't know that for sure. And no, I'm not trying to do a pump and dump or anything. Yes, I'll hold shares of them, okay, of that stock. But I think there's a decent chance they're going to increase the dividends. Last quarter, they paid 20 cents. Guys, I'm hoping for like a 30 cent minimum, which will put us above break even on most margin, barring margin to buy that stock. But that would be really cool if they did 40 or 50 cents. We'll just have to see how it plays out. But I'm liking that stock just as a dividend play. So I'll put that in I'll even make a note here. Let me make a note. I'm going to put that in the fixed income channel on the Discord server. Both corporate bonds that I think are good opportunities. Okay. And ARLP. And I'll put here on the Discord channel. Okay, like a note so I don't forget. Right, because I know there's some members that want to do more long-term investment style holdings. They got family, they got kids, they can't always trade every day, whatever, they're busy in life. Okay, so I think fixed income is going to be really popular with a lot of people on the channel as well. Okay, all right, let's get back to this. So here we are, and this is what I'm looking at here for the Friday session, guys. I mean, my goodness. 2 days in a row. Look at this, bombs away, right? Bombs away. And what's there not to love about this session? Just looking at the hourly chart for your intraday traders and your hourly traders and short-term traders, you already knew the prices were on their way down. And then the opening session was right there, went below, got hit resistance. That right there, that candlestick is so tradable. And then everything from that point, guys, any red candlestick, those three are tradable. Yes, you're going to have to have your stop losses in there and deal with these lower wicks, but so what? That's trading. You just put your stop loss in there And when it bounces back up against you, you stop out. That's just trading, but you're going to make a lot of money on all these red candlesticks. Okay, especially look at those monster candlesticks. My goodness. Last, what, 3 hours of the day, these third to the last hour, second to the last hour. Okay, nice. I don't think that candlestick right there is a hill of beans. I mean, you might have market makers and Federal Reserve and BlackRock doing their nasty dance as they always do, but overall, I think prices will continue to decline. Okay. I don't even need to look at the 5-minute chart because this just the last session and a half was so tradable to the downside. What a monster mash! Look at this. Look at this pump. Let's pump it up, and then let's dump it out. I mean, seriously. Oh my gosh. And this, very similar things on some other products, by the way. Talk about a rigged market. What a rigged game this whole thing is. And that's, and I get it. We can trade against the known rigged market and all that. But, it's definitely not a free market, guys and gals. It's a sad state of affairs that we live in nowadays. Anyway, let's move over to crude oil. I don't want to get off on a tantrum about how rigged this whole everything is in the world right now. So pathetic. Crude oil. There was a candlestick from Friday. Looks like we went into... did we go into a new... We might have gone into a new contract. February? I think we got into a new contract there. That's what I'm seeing right here. Yeah, I think that's a new contract that happened already. Yeah, I'm sorry. Here's February, duh. Right. So, yeah, trading the February contract. That candlestick right there... again, well below the 50. My goodness, look how far below the 50 we are here. MACD's trying to show some strength here, well below the zero line. But even on the daily, crude oil still looks weak short term. Still pointing down, guys. That's where I think crude oil is going. It's going to continue to go down. Let's look at this chart right here. I mean, this daily cycle. See, this one's December 22nd. Some of them have like Christmas Eve. Some have the day after Christmas, whatever. Okay, a lot of these products are pointing down going into Christmas week. And crude oil is showing the same thing. Let's look at the monthly. Wow, weakness in crude oil continues, guys. And if this divergence warning stays there on the Big Daddy, that's going to be pretty huge. This is starting to clamp down a little bit. Crude oil, I'm not going to say it's in trouble. I don't like to speak in those terms because here's what I see, guys. Opportunity. It makes no difference to me. Opportunity. Okay, I just see opportunity. The only time I don't see opportunity is that kind of choppy stuff. There's opportunity there in there as well, but you're going to have to be a really seasoned trader. And I know we're looking at the monthly, but just assume this was daily. And you got a lot of chop like that. You got to really be a seasoned trader. You'll be looking at volume and stuff like that to make those kind of trades. Or you could use options during sideways markets, okay? So anyway, on the monthly time frame here for crude oil, the divergence warnings are there. And if they stay there through the end of the month, crude oil is going to have a price decline that's going to continue long term. Okay? Let's go to the weekly. Yep, still sitting there, bouncing on the 50, ended up at a red week. This is pointing down. This is pointing sideways. This is trying to come up. Okay, doesn't look strong to me, crude oil. It continues to look weak. There's a decent chance crude oil could break below the 50 week. It could happen. Let's look at the hourly. Yeah. Okay. Wow. Let's see. Is this then? Yeah, this is the Friday session right here. Okay. Almost the entire, half. Yeah, most of the sessions below the 50 hour. Wow, look at that. Look at all this chopping here. But there's some huge candlesticks to be traded. Huge. Oh my gosh, look at this candlestick. That was a tricky candlestick to trade, that one. Right there. Okay, but that one's a gem. That one's a gem. This last one over here, those are all just precious gems, guys. My goodness, crude oil was so tradable on Friday. Monster mash, guys. Monster mash profit taking. I tell you what, regardless of all the rigged market, there are so many opportunities right now in futures product. It's crazy. Let's switch over to gold. There are a lot of opportunities here, guys. Go to the daily here first. Look at that. Oh my gosh. Is that going to be a shooting star? Is that shooting star or evening star? I gotta remember my candlestick patterns. That's a shooting star, right? With that upper wick like that. I think that's a shooting star, guys. And if Monday is a really strong down day, then that's going to be a true shooting star. Okay. I believe that's a shooting star when it looks like that. I just don't remember if the body has to be above the previous body. So it looks like a shooting star to me. It might be an evening star, one of those deals. It's one of those two. But so if Monday is like this, right, then that thing is going to stick out like a sore thumb. That's going to be like, right? So at the moment, gold, a little bit of weakness here on the Big Daddy, but everything else is pointing up. So gold got above the 50-day. Let's see if it can do it, guys. Let's see if gold can get some legs underneath it and stay there. You know, this. Let's just say Monday. Let me zoom in here just a little bit. Okay. Today's Saturday, so I can take a little bit more time and do the video here. Let's just say that this is the upper part of the body, right? That's where it closed. So let's say Monday does this. It'll be a sign of strength, right? A green candlestick, right? But if it does one of these deals and starts tracking down, then we know that this above the 50 was just kind of this temporary thing. But right now it looks strong to me. Gold looks strong on the daily. Okay, let's switch over to the monthly. That's a bit mixed, right? The short-term indicators are starting to peek their head up, and they're starting to go in this direction. The MACD's like, jeez, you know, huge. I mean, look at that thing. It's going to take some effort, guys, to get the MACD to turn here on the monthly. Okay. Just trying to connect the dots here. You know, there's also a possibility to connect it this way. Okay. And these two lower candlesticks are enough to give us a triangle. You really like to see at least three points of connection, but we got two. I talked about this before. So what's the deal here with gold? Remember, this is a monthly chart. Okay? And all of this is 2022. Okay, if we just extend this line on the monthly charts, it's kind of like that. This is very rough, right? So let's see what happened here. It came down, all the way back up. You had a kind of a weird quick down, kind of a quick up. That happens sometimes. You get into this long down, and then they'll start getting kind of, the oscillation will compress, right? Meaning the distance, or if you look at this angle here, okay, will begin to compress, right? So let's just stick with that. We could estimate where gold's going here. Okay. So right about there, guys, March of 2022. Talk about this, I think, on Thursday. I think Wednesday or Thursday. I see high 1600s. Okay, think about that. I see gold in the high 1600s in March. So I think we're going to get some price rebound here, which we may have already gotten that. It could go up a little higher, whatever. But I think going into spring, get ready for gold to come down. I think down into, that's 98 points lower than we are now. Maybe even 108. That's where I think gold's going. Forget these cycles here, guys. That's only daily stuff. Okay, let's look at the weekly. Temporarily, looks like there's some strength here. Everything else, only the Big Daddy's showing potential for gold to go up. Still weak below the 50 week, so it's not enough yet to convince me that gold has gotten its legs under it. Okay. Let me go back to the daily just one more time before we switch to the hourly. I just want to look at this cycle low of 1214, guys. I talked about this before, guys. Look at this cycle right. It's the green. I'm talking about the green one. Ignore the yellow one. Look at this cycle right here. Now I ask you, what's that candlestick doing right there? What are these two candlesticks doing? They perfectly timed themselves down into this cycle low. That is just scary how good that is, huh? Isn't it amazing? Look from here, guys, all the way down. It flattened out a little bit and then made its last little drop right into the cycle low. Guys, it's scary how cyclical things are in life. That is absolutely, you could bank on it. You could absolutely bank on that cycle low right there. And I mean bank, as in put it in the bank and take the profit. It's scary how good it is. Okay, so now that we're on that topic, let's look at the next one. January 25th, guys. Okay, doesn't matter if gold's way over here. Just expect some type of price stall and decline at this time right here, January 25th. Make a note of it. Gold will stall or drop down or do something somewhere around that time frame. Okay, just like it did over here. Just like it did over here. Okay, pretty cool, right? All right, switch to the hourly. Wow. I mean, these look like they're trying to bottom and turn. But even if, okay, on the hourly, even if gold kind of does this, I think it's going to turn back down and go below the 50 on the very short-term hourly. That's my best take right there. Was it tradable? Yeah, it was tradable this session, especially long. Because now we know the gold on the daily had peaked its head above the 50-day. I'd trade that whole thing right there. I'd be cautious about trading this way, but it's tradable too. I mean, this is so ideal. Look at Thursday. Oh my gosh, the whole thing was so tradable. It's crazy. The whole day Thursday. One of the premium members, I think it was, I won't mention his name, but he talked about, did I trade gold? I didn't. I had a swing trade going on with ARLP, and I had one contract in oats, so I can only take on so much margin risk. So I got those two things going on. But he was 100% right. Look at that opportunity on gold on Thursday. And there was plenty of opportunity Friday as well. Okay. So what do I mean for those that don't know? Well, you get 2 candlesticks in a row that are green. That one and that one. You start trading the second green one. Okay. That's what you do. On the way down, it's a little bit harder to trade this, but you saw this big red candlestick, this little one, then you trade that one. Down, that one, that one, that one, that one. Trade all the red ones. Okay. All right, let's switch over to natural gas. Look at the daily. Okay. I mean, natural gas got the big gap down here, right here. It did this big gap down about a week and a half ago, whatever it was. It's been pretty weak. A few of the days were tradable. That was tradable. I think that one on Friday looks like it was tradable. A lot of chop here. Hard to trade it. I wouldn't swing trade natural gas. I've been saying that for the last couple of weeks. I wouldn't trade it as a swing trade. It's a little dangerous. It's too choppy. But intraday, I see opportunities there on those fairly decent red candlesticks. Okay. I don't even know if I should really cover the monthly and weekly. Nothing's changed there, but we'll just look at it real quick. What can I tell you? It hasn't bottomed yet, and we got divergence warnings. And natural gas, I mean, looks, and this lower wicks even gone smaller. It was bigger than that just like a week ago. So natural gas is going to, I think, going to continue to have a price decline. And it looks like to me, guys, natural gas is going to try to return to this 50-month moving average of about 290-ish, let's call it. $3. I mean, if I were an investor and I had a big account, I'd short it. I would. I'd short a few contracts on natural gas, and I think it'll come down into the low threes. Opinion only, of course. Okay, let's look at the weekly. Yeah, these guys are trying to bottom too. They haven't yet, and this is huge. Got the old Mississippi River and Suez Canal going on there. Okay. You know, this thing is barely staying above the 50 week. If it breaks below the 50 week, guys, watch out. Watch out below. And I think it's going to do it. I mean, and it's hard to say because these are pretty far down there that you could get a bounce here. But overall, natural gas on almost all the charts looks weak. Okay, hourly chart, definitely tradable. Now I could say, where I couldn't say this a week ago too much, but I can say it now for intraday traders. Oh, heck yeah. What's there not to love about all this? Okay, I shouldn't say love, but you know what I mean. Opportunity, let me put it that way. Okay, opportunity. Everything red on this daily chart for the last 3 sessions is opportunity. I talk about this all the time. I'm going to say it again right here. Keep it super simple. We're really far below the 50-day, right? On the daily chart, we're well below the 50-day moving average. That means you can short everything that's red on the hourly. You don't even have to wait to get below the 50 hour. You just trade everything that's red. That. Okay, obviously you're not going to touch chop. You got to be patient. All of that. And just ignore all the green runs. Just ignore them. Keep your life simple. Can everybody see that? You would trade this red candlestick. Once it got below, I'm going to just keep this like I always say. Once it got below that lower wick on that green candlestick, you trade the whole half or more than half of that red candlestick. You pretty much trade most of that one. Okay, this was a little tricky to trade. You get stopped out on it, but you got something out of it. You ignore all this. Okay, you could start the entry right there at the bottom wick of that. You grab that lower part of that candlestick, all of that one. You stop out on this one. You wait. You might try to trade. It's going to be, I'd be patient here. When you start seeing that chop, the MACD's trying to cross over. Okay, you got to be a little patient there, right? You're getting into crossover territory. Okay, this one shows up. You might not trade it at all. Kind of tough to trade that one. All of this one gets traded, the whole doggone thing. This one, almost the whole thing gets traded. Look, the lower wick, you only had a little bit of the upper wick, so you got from here on down, it was all profit. And you may have gave back only a little bit, depending on when it happened. Doesn't matter. Okay, and then from this candlestick on right there, that little one, bombs away. You just trade them all. Okay, that one's a little challenging, but whatever. Okay, and then clearly on Friday, you traded those three. Everybody understand what I'm saying there? Go back, pause the video, watch again. I really like trading second candlesticks because they're usually continuation, especially you got the MACD doing this. Look at this MACD. Look at it. From that point all the way over to there. Look at that thing. Look at it. Okay? And you could pay attention to your SMI, Stochastic Momentum Index, to try to give you a sense of, more short-term movements, right? So tradable natural gas, intraday, lately anyway. Okay, let's switch over to oats. Oats. What's going on in the world of oats? I think there were some big trades. Oh no, let's look at the daily. Okay, I wouldn't trade the last 2 days. I just wouldn't touch oats. This is such a huge event. Oh my gosh, look at this huge event, guys. I wouldn't have traded oats the last 2 days. I just would have relaxed, trade other products. Excuse me as I get a sip of coffee here. I wouldn't have traded it. Just keep it simple, guys. I just keep it real on this channel. I would not have traded as a swing trade wheat below the 50-day long. That's crazy. That's insaneness. I'm talking to swing traders now. Okay, no, I would not trade this because it's green. It's below the 50. It's a simple rule. If you're below the 50 on the daily, you trade it short. In other words, you trade that candlestick. If you're above the 50, then you trade the green candlesticks. I know it's crazy. Well, in this case, okay, I wouldn't have traded that. This is a different scenario. And the reason we could safely trade short is because of that. Okay, so there's times where that general rule gets thrown out the window. The general rule, guys, is if you're above the 50, you trade long. If you're below the 50, you trade short. But when you get something like this going on, okay, from that moment on about right there, you can trade it short. Okay, so there's times where the rule doesn't have to be followed because the MACD's telling you, don't sweat it. You got the Suez Canal going on. You can put a freighter ships through there, okay? So don't sweat it. Just trade it short. Okay, but now these short-term indicators are kind of showing a bounce. Okay, well, okay, not everybody has the Big Daddy, so my apologies. But, down here, this looks pretty flat, okay? So that's a little bit tricky. I would not have traded the last 2 days. That's all I'm saying. Not like that. Not below the 50. I just would have left it alone. For you swing traders, that's my take on that, okay? We go look at the monthly. It's a weak month. We got divergence warnings going on here. I've been talking about this. If they stay there through December 31st, if those divergence warnings stay there, guys, then I think wheat is going this way, and I think it's going to roll over, and I think there's going to be a lot of money made for those that are in the know, and they're going to short this bad boy just like oats. When we come up on oats here in a little bit, I'll talk about oats. I think the opportunity is going to be huge, especially if those divergence warnings stay there. I think we're going to see a big price decline in oats, and there's going to be a lot of money made. And just like oats, I think there's going to be fortunes made on these two grains. Okay, let's take a look at weekly. Yeah, bombs away on the weekly for oats. For wheat, sorry. Oh, I got oats on the brain now that I mentioned oats. This is going to cross over most likely. These have not bottomed yet. Okay. And I think the divergence warning's back there a couple months ago, whatever it was. When was that? That was back in oh, sorry, weeks. Sorry, guys, we're on the weekly chart. A few weeks ago. Um, yeah, they're bearing fruit. Look at that. Look at that. Oh my gosh. I think there's more price decline to come in wheat on the weekly chart. As it looks like to me. Even if we get some type of temporary bounce, I don't think it'll last. But we'll have to see, because see how it happened right here? See how we got this bounce and it went up? So, that is possible. It could get like oh, we're done and go up, and then this just reverses. So can't discount that possibility. It could happen. Okay, let's look at the hourly. Flatlined, just flat, choppy chop. That whole session was really not tradable in my opinion. I wouldn't have traded Friday on wheat. I wasn't trading wheat anyway, but if I was looking at it, I wouldn't have traded it. There's just, this is just ugliness. You could trade like that one if you really wanted to. Okay, there's you could even trade that as possible. There's a few candlesticks in there that are tradable, but why risk that? What you really want is that kind of stuff and that kind of stuff, right? You can just move on to other products. Don't trade this nonsense. Okay, let's move on to oats. Okay, just for the record, guys, I don't trade oats on an intraday. It's too thinly traded. For those who don't know, oats is thinly traded, so be careful if you're going to trade it. Friday, yeah, I talked about this, I think, in the Discord server on Friday, that, I'm holding one contract in oats, and now that's just a beautiful thing right there. Finally broke below the 50. We'll see if it stays there. Big Daddy's still pointing down. Absolutely amazing, the weakness here. This is like crazy. Crazy. Okay. So we'll see. Does oats finally give it up, or do we get some kind of bounce here? Okay, it's been defying gravity, and the gravity is at least for one day, gravity has won the battle. Below the 50-day. We'll see what happens here. I'm cautiously optimistic. I don't want to get ahead of myself on this thing. So I just kept the one contract, and I'm watching it carefully. Let's look at the monthly. Yeah, divergence warnings here, guys, for the last 2 months. Again, just like wheat, if this divergence warning stays there, right there, at the end of December, then bombs away, I think, is coming for oats. Bombs away. Okay. The short-term indicators on the monthly chart are showing weakness. The MACD is like, oh my gosh, look at that thing. It's going to take a lot to get that to turn. Okay. But there's definitely some weakness going on here in oats. We'll see if it's sustained. The short-term indicators suggest there's more to come. Let's look at the weekly. This is the chart that really has my interest. We could get a little bottom here and get some bounce. There's divergence warnings all over the place. But that divergence warning right there right here at the bottom is usually a false flag. These over here, let me grab the pencil. These over here are legitimate divergence warnings. But when you start getting down into the bottom of the indicator, and even for the SMI, then those divergence warnings tend to be false flags. So I don't really pay a lot of attention to them. And maybe one day I'll work on the logic to filter those out. But for now, I'm just going to leave them in there. So I'm a little bit, like I said before, I'm cautiously optimistic because we could get a bounce here. And I may, if the position's profitable, I'll probably just close it out and take the profit. Right now, I'm about break even on oats. On the one contract, because my entry stunk. It was a bad entry. That was my fault, but whatever. Trading is what it is. You just keep honing your skills. But so if we get a little bounce, I'll probably just close the position and either be at break even. It might be a small loss or a small profit, whatever it is. And then I'll re-enter when I think this weekly chart shows that it's done doing this little bounce. Because I think even if it does bounce, I think it's it'll do one of those things and come back down. Right? You follow me? It may not come all the way down to this area, obviously, but so we might get one of these deals, and I think it'll come back down. So if we do get that bounce, that's probably the way I'll do it. Because I think oats, guys and gals, okay, and this is the weekly chart, by the way. I think there's going to be fortunes made. I don't know when it's all going to play out, but this is looking like it wants to give it up. Long term. Short term, you might get the bouncy stuff, but long term, I think oats is doing this, and I think there's going to be fortunes made on both wheat and oats, especially oats, because it's seriously elevated. You just go back to the monthly real quick. Look at this craziness, guys. Look at this. Look at that amplitude. Okay, I don't have the amplitude indicator on here right now, but this amplitude is some of the highest amplitude we've ever seen in oats. Okay, so that's simply the distance between the 50-month moving average in this case and the bottom of the most recent candlestick. But even that was, look at that amplitude right there. Okay, so that's why I say fortunes will be made. It's not if and will there be. I mean, can there be if blah blah maybe? No, there will be people who are already positioned, who have lots of contracts in oats, and they can stomach big price swings, and they're going to make millions of dollars on oats, guys. I guarantee it. Hedge funds, maybe even really big individual account holders who have millions to play with, they're going to make millions of dollars on oats, guys. They're already positioned to do it. 100% guaranteed. Okay, let's finish up and look at the hourly, which, like I said at the beginning, I don't trade oats on intraday because you can see all these little white specks. Those are where there was nothing traded. So this thing is thinly traded. So if you're going to trade oats, first of all, this is all my opinion, so I don't give financial advice. I would keep the position really small, really small. I would have your risk management, meaning your stop losses ready to roll at a moment's notice. They should be in place anyway. Okay, that's how I would do it. I wouldn't trade it intraday. Oats is definitely a long, very long swing trade, or even an investor type of move is the way I see it. Excuse me as I'm slurping away here on my coffee. That's the way I see oats. I wouldn't trade it intraday. It's just not one of those products. Okay. Okay, guys, that's it. I think 2022 is going to be it's going to be an amazing time. I think particularly watching the Fed interest rates, guys and gals. I think we're just going to see how much, they're going to do a little 0.25% here, a little 0.25% there, but if they start jacking up those interest rates significantly, then I think fixed income is going to become a place where you could potentially make some serious money in the secondary market on corporate bonds. Okay? So we'll see how that all plays out. That's it for now, guys and gals. Talk to you all real soon again next time.